Good afternoon, traders. Welcome to a beautiful Monday. I hope you all had a great weekend. I hope you all relaxed and enjoyed yourself over a few quiet beers like I did. Now, I don't know why I say that, but anyway, I hope you had a great weekend. We're off to a nice Monday. The market's pushed up as we expected after Friday's session. Pushed up, and especially after Friday's, we got the US session, which was quite good. And also, we didn't have such a great Friday going into the weekend. So I think we're just making back ground what we lost on Friday. It looks like, oh, look, we'll get into it in just a minute. But before I get carried away, we'll just remember we got just the usual. We've got our trade setup live stream page, which you can see on screen. What we're going to talk about today is 3 reasons you need oil stocks in your portfolio. So we just want to discuss oil, where it's trading at. We have discussed this a bit in the past, just oil, just to keep an eye on it. But I think we're just going to in a bit more depth with a bit of fundamentals. We're going to look at some technicals on there. So we'll play the video in just a minute. Just a bit of housekeeping. Just remember we've got our general advice warning down the bottom, just for you to read. You can join us either on Twitter. Just go to the top left-hand corner. You can see the site to go to there. Join us on Facebook, or just link into us on subscribe to us. Sorry, on YouTube. So you can jump in there, join us those ways. If you like us and what we're doing, just pass the word if you can. That'd be much appreciated. One thing I just want to touch on, I know what we've got here is the page. That's the live setup page. Now, a few people are getting that blurry screen. Just remember, if you can click on that spinning wheel here, go to quality, include it to 720, and that will solve the problem. All right, so if you haven't any issues there, just let us know, but that's how you get a clearer page anyway. All right, let's get into it. Let's just get into where the market's trading. Let's just minimize that then. So we had the US, which actually I think the Dow was down on Friday night, but the broader market, the S&P, was actually a bit stronger. We had a bit of reporting kicking off with the banks. I think it was Merrill Lynch, I cannot remember, Bank of America, and there's another one that came out reporting. No worries, Frank. Thanks for reminding me on that as well. Now we have, the reporting out, which was, I think they actually beat estimates, so that's really pushed that sector up. I think during the session, the sector kicked off quite strong, sold off into the close. It just sort of grounded its way lower, but financial sector did quite well because of that reporting. I think it's going to kick off. Actually, the US is closed tonight. It's a US bank holiday, so the market's a bit quiet tonight, but kicking off again on Tuesday. So what we've seen Friday going into the US session overnight, we sold off on the ASX quite heavily actually. Some heavy selling, especially into banks. You can see just as a glance, Westpac got sold pretty heavily on Friday. Same with CBA, pretty much across the board. NAB was down as well, and ANZ. So it may be a bit of an indicator of what's happening on the ASX 200, but we'll see how that goes. We'll take a look at that in just a sec also. Yes, it looks like we're up 24 points at the moment. We did pop up on the open, then we've just backed off slightly, but that looks like it's just making back some ground from Friday, really, as the US didn't sell off. I think a lot of people are just trying to preempt what's happening in the Trump rally, and potentially just getting caught. So always, I guess, why I like to view things, you go with the trend. Don't try to second guess it. Just trade what you see. Otherwise, if it does kick on, you're expecting to sell off, you get out of your position and it just kicks on without you. That's the last thing you want. So but always keep it back. Keep an eye on what's actually happened to the global markets, what's happening overall, what is it showing, what signs are you seeing. So we'll go over that just now. We'll just take a look at the ASX. Now you can see this is the 30-minute chart. We'll just drill down. It's been sort of making those lower highs since hitting 50, 58, 10, that sort of region up there. Made a little, as it spiked up, made that lower high and sold off. Did try to push back, but only got us so far as about 5,800, 57.95, that zone in here. Washed it out a couple of times, but then we made that major lower high at 57.80, and that was that good sell-off on Friday. And then we just grinded a bit higher into the close through the US. Early hours Saturday morning, and we've opened up, and it looks like we could potentially, I think the key level just at this moment is about 53.38, sorry, 57.38. So if the market pushes down there, you can see a bit of rejection up there at sort of that 57.60 zone. So if we start rolling over and take out there, what you'd want to be looking for really is just that lower high. Just get that If it just pushes down from here, takes out these lows, you can see through there, what you'd want to be looking for is just that rejection off a lower high, and then potentially we could be working our way back down again. And then obviously the first level you sort of want to see how it reacts is down at that 57, so 57.10 mark. See if that major level can hold up. If not, we're just going to make a lower low, and then we really just want to see how this market goes. It could hold up just around here. It's not a key level as such. It did wash it out, and we just push straight back up again. So it'll be interesting to see if it does wash out, and if we just pull up short of taking out those lows at 57.20. So, but we'll see how that goes. What else to go? I think for longs, really, you just need it. It's probably going to sell off, you would expect. I can't see it just grinding higher and retesting these highs. It may just bounce around and make a last-ditch effort at the low, and then we might see some buying step in. But you do need to see that higher low above this one here, I'd say. But it may take, obviously, a lot of time to work out. Let's take a look at the euro. Oh, sorry, we'll click over to the pound. Now, the pound's got savaged. I think it was on Sunday's trading. This is the CFD, obviously, and it's opened up pretty weak today. From where it closed on Friday. So it was around that 121, 122 mark, and now we're trading around 120. So I haven't looked at the news. I only noticed it a few minutes ago when I was getting this chart up, but we were obviously biased to the downside, and we think that there's going to be a lot of shorts, a lot of long positions, retail punters probably, retail traders that may have been buying it off longer term, buying it off this support level in here, which I think they're going to be squeezed out, especially if we start getting through those levels there, and a few of those long positions will be squeezed out with sell stops triggered just below there, and that may just push the market lower. But either way, it's not looking the best down here. We could go into the European session tonight and just bounce off that level and work our way higher, but still, shorts are well and truly in play. We've got a major key level at 127.74, which is holding that leg down currently, and just some of these minor levels at 124.36, and potentially another one now because we just touched down those lows around that 123.20. All right, so if you're looking at the pound, if we start breaking up through that 123.20 originally, I think we'll probably start working our way back up through 124.36 and maybe up to retest longer term 27.74. But our bias is well and truly to the downside at the moment. We'll see how it goes. Anyway, the euro. Is anyone still punting on the currencies there, trading those? While we're waiting, we had a daily chart. I think we sent in an alert on this on Friday. The daily chart is just working its way off 104.50, the key level, which you can see the anchor. So it's contracted higher, and then the anchor which produced this leg down into 104.50 is anchored at 108.76. So there's a fair bit of room to move before we get anywhere near there. But you can see this type of price action. It's washed out a couple of times, and it's just contracting higher. There's not any sharp sudden moves higher, which we've just followed on. You got that move higher off there, which got sold straight back down again into support. You can see that move there, and that was sort of it. We need to see this type of move, push down, holding the lows pretty much like this mild contraction, and another solid push down. That's what we saw on the downside. So if we're really going to be biased to the upside, you'd want to see that type of price action. Whereas at the moment, we're not seeing it too much. So what I'm really viewing this as is a bit of contraction, holding below that 108.76 mark, maybe pushing a bit higher from here, but then then we'll be watching for those lower highs. If we can get those lower highs, let's just draw that in. This is market sort of popping up here and then starting to get these lower highs form. Okay, when we get in a bit of contraction, then I expect that to lead to a move lower. But we'll see how that plays out. That's what we're looking at for the euro, and you can see again it's a bit to do with well, the overall trend is down. I'll just wait till that loads. It may take a little bit to load. This is a 4-hourly chart, what we're looking at. So you can see that major trend is holding. It is getting sort of more to that extended downside move, but major key level at 104.50, which has just been, well, has been in the past, just washed out a bit. So that's a bit of an early warning sign that if it just seems to creep back in and grind a bit higher, there may be another leg to the downside. Anyway, let's get into it now. So that's where we're at with the currencies and what we're looking at. Like I said, we'll do a bit more on the currency. So anyone interested in FX, just keep an eye on the alerts that pop out at tradesetup.com.au. Just watch out for those. If you're new to everything what we're doing here, you can go to Android and just download the app, or you can go to Apple iTunes I think it's iTunes or the App Store. Sorry, let's get those two mixed up, and just download the app there as well, and just have a look at it. So let's get into it now. So what we're looking at, oh, better open that video, hey, is we're going to take a look at crude oil JPEG before. Okay, this is the one here. Okay. So what we're looking at is obviously just mute that, is crude oil. So we obviously got a bit of a bias to the upside. I think it's more of a long-term play, but it's definitely, I think, at the moment something to keep an eye on. It's not saying that we think you just start loading up on the boat, loading the boat into oil stocks, because they have been beaten down a bit. Obviously, waiting for the setups, the longer-term setups. But I think the longer-term view is that we feel that crude is going to make back some ground. I think they've only done this a few times with OPEC, and come to agreements on production cuts. And each time it's actually led to a 20 or 30 buck rally in crude oil prices. So it could take a lot of time. We don't know. It may not even happen, but I think the risk to the downside is not as nowhere near the benefits to the upside. Anyway, we'll get into this now. Let me just press mute on myself, and then we'll press play. Okay, what we're going to take a look at today is crude oil, and the three main reasons we believe that you need to start looking at stocks, oil stocks in your portfolio going forward. Okay, we've touched on oil a bit as of late over the last few streams. We want to go a bit more in depth on the charts and the reasons behind why we actually do like crude. So the three reasons basically, we want to start looking at the fundamental picture of the landscape of oil at the moment, what's happening in crude oil, and where to from here, with what's happening in OPEC and the production cuts, and what that could happen, and what that could mean for oil prices going forward. Also want to take a look at, or the second reason is obviously the crude oil charts. We look at it from a technical perspective. Take a look at crude oil. We'll just go over the charts and why we do think they've got a lot of potential for a strong up move. Third thing we're going to take a look at is the oil sector, and then we'll probably go over a few companies just after that, just to go through a few that starting to shape up and are starting to look a bit pretty good. Because we do know they've a lot of the crude oil and itself, crude oil and stocks have been beaten down over the last few years, probably since 2008. A lot of these are taking a bit of a beat now, down on their lows, so there is a lot of potential for upside movement. So we'll take a look at those. Okay, as most have actually been following crude, we've chatted about it in the past about what's all happening with OPEC and the agreed production cuts. Now they're all starting to filter through. We know that, and we can see that crude's actually starting to gain a bit over the last week or so. The biggest thing now is whether or not they're going to adhere to those promises or those cuts. The OPEC group. Now we do know that Saudi have just come out recently and cut more than they actually mentioned, or more than they promised, or more than they agreed actually. So that's looking good from their perspective, but it's other members, members of OPEC or non-members of OPEC also. Are they going to live up to what they actually promised and make the cuts that they actually mentioned, or are they going to slowly filter those out or take a bit of time, or what's going to happen there? So we've got a couple of articles I've just had a quick look through. Okay, we see this is from Seeking Alpha. They're actually both from Seeking Alpha. What the biggest thing we're just starting to look at now as the data filters through, and there's more data coming through regarding the cuts from OPEC and non-OPEC. All right, there we go, got that out. The market became a bit more skeptical in the last week or so of the depth of the actual versus announced cuts. So it'd be interesting to see how all that plays out going forward. But I think if Saudi actually leading by example, and I know Russia will probably be doing pretty much the same type of things. They're really sticking to their guns there, and they want higher prices. A lot of the other members, I'd expect that actually OPEC members and non-OPEC members will stick to their guns, and I think that will start. Hopefully, if that starts filtering through, we will be starting to see higher oil prices filter through as well. The second article we just go over here, you can get these from. You can see the website there, seekingalpha.com. Just go through, then just Google. There's a bit of oil information through there. The second one we found, weekly oil markets recap Saudi wants higher oil prices. So whether or not, my view is this could be a bit of a manipulated market. Obviously, when they can change their output, change prices, they really do have a weighting on what prices are doing. So obviously, after this big slide since, was it 2008 of oil, they really do want and need, it looks like from this article anyway, higher oil prices. So they've got to average, I think, Saudi break even roughly of around, I think they say 65, in the mid 60s, $60 a barrel, where I think the IMF actually says that Saudi Arabia's break even oil price is around 60, 70, $76 a barrel. So from that point alone, we obviously see that they do want it and probably need it higher than where we are currently, around the 50 to $55 mark. So in that respect, I really think they're going to push from here on in to get those oil prices at least basic and start to work their way higher. And we should see that, I think, in the near future. So that's one of the reasons why, fundamentally, prices are heading potentially in the right way. We may get a bit of choppy action around what we're seeing at the moment, but once we look at the charts, we'll see a bit more on what we're talking about here, why we think oil's actually gone out of sliding lower to actually at least basing and finding, because it's hanging around that $50 a barrel mark to 55. I think once we kick up through 55, we should start seeing a few more buyers enter the market, and then we should start seeing some of these share prices starting to move, so really kick along, which would be great. Okay, let's just get onto the charts here. This is crude oil on a daily basis, and that's way back. I think it's around 2013. That data there, so it's you can see from left to right. If we just make sure we can see that chart there. Yep, that's okay. We made that high up around at 125 a barrel, a bit of a pullback, then we pushed back up and retested that level there around 125 a barrel, and that was back in mid 2014, and then had a massive sell-off from there. You can see it first started off quite not controlled, but it wasn't so savage, and then you started getting, as we couldn't get up through a little minor resistance level at 115. We tried to have a bit of a go there, just in here. We'll just draw that up actually. We just couldn't get through there, and then market just started selling off a bit more savagely, especially when it got through that support, which is that low of 105. And you can see that really didn't spend much time consolidating this bang, and those savage down days we saw, and that was right up until it sort of started abating around the start of 2015, and then we had one leg down, bit of a pop up, retest these lows through here, and that was around $65 a barrel, and then pop back up. So we've got a major level here at 77, and then we had another good sell-off, and you can see it started accelerating. A lot of consolidation through there, so the longer it spent consolidating there, and we could see that it just wasn't going to get back up. It wasn't going to make much more ground up from after taking out this high at 74, this previous high just in here. Yeah, it just started going. It really started speeding up there. The sell-offs, the days were a bit more volatile. Things started getting really volatile, and then selling off quite hard. We got down to 52, where we did pop up, and then we started consolidating a bit. Tried to go a bit higher, up through 64. Heading our way back up to 78. Just didn't work out that way, and we started seeing. We can see here that lower high, which led to another good sell-off to the lows back in, what was that? Mid-February 2016. And that was been the lows around $36 a barrel. So that was where you can see, obviously, crude oil's been pretty much caned. Any other term to put it? So we'll take a look at, just drill it in a bit more. So you can see that big sell-off that was, it went through the end of 2016, really got hammered. That's why the share market got hammered in the beginning of 2016. And then crude started gaining ground, building some high lows, and pushed back up to about $55 a barrel. And that was about mid 2016. Then we sold off, but the thing is, we made more of a major high low here at 42. Let's just draw that up. That's a key level there. Sorry, just get a little circle there. Okay, so that's the 42 to $43 a barrel there. Worked our way off that level, picked back up, made a lower high there. And you can see, if we just go back a bit, that's this downtrending. So the trend really still is intact. We're looking for really the market to start rolling over from here, and it looked like it was going at one stage and really go back down and retest those lows at 35, but it held up and it started pushing back up, made a little inside higher low and pushed back up, tried to break out and even retest up to that high at $55 a barrel and sold off again. So what we're seeing now is the market's held and retested that 43 level and has pushed up, and it's really just, you can see that downtrend began right back in 2014. Mid 2014 has just been broken. So if that's any signal on where crude oil prices could be going, whether or not we just sit and consolidate, say, between $43 and $55 a barrel as the production cuts work their way through the market, and if the fundamentals we do, like we just mentioned before, if Saudi do get their own way and they can really buoy this the crude oil price, then we at least would expect this just to be banging around in between those two levels at the very minimum. But what we can see are these higher lows, if they continue to hold, then what we should start to see is a bit of pressure putting on this $55 zone. So what we would expect to see is maybe a bit more toing and froing between those levels, but those higher lows starting to hold and just fail continuation lower as the buyers take more, take control. Sellers starting to wear out, especially as it has come down from way back when, 140 to 45 a barrel, 125 a barrel back in 2014, and it got sold off quite hard, and we hit that lower $35 a barrel. Then you would expect that there's been quite a bit of selling and it's going to run out of steam sooner or later. So what we would expect is maybe a bit of price action like this, all right? And then eventually to pop up through 55, and that's going to be a key level. There's probably a few stops that are going to be tagged in there, and they're going to be washed out of the market, and that's going to take a few buy stops, obviously, and that's going to take the market you'd expect back up to, say, 64, and even through that and up to $77 a barrel. So if that's the case with crude oil, then I think that's really going to put the shine back into oil stocks and energy stocks. So we'll take a look at those in just 1 second. Okay, what we're looking at here is the S&P ASX 200 energy sector. The stock code is XEJ on the ASX. So if you can get that data, take a look at that. This is a monthly chart, and it goes right back to, I have to just get my chart up there. Bear with 1 second. Goes right back to, we got this data starting off around 2002, 2003. Just get that chart back up and we can draw all over it. So we see that big push up, and that got up to, what was it? That was probably roughly when back in 2008, 2007, 2008, when it was trading up to $145 a barrel on crude oil. We see a big sell-off. We got belted through there, and that was due to the GFC. Just checking on the dates, that was 2008, 9, 10, yep. And then we saw that big bounce, and then we really started running out of steam. Then you can see that major double top, and this is remembering just on the monthly chart there. Then we saw a sell-off, tried to build that higher low. It did work its way off for some time, then really capitulated, and that was right back into the start of 2016, where we've just worked our way off those lows since then. So what we'll do now is just take a look down at the weekly chart. Okay, we've got a snapshot of the weekly chart here on the XEJ, and we'll just start drawing a few different lines on that. So we've got our resistance up here, and then we've got another resistance up around just above 15,000, where it's headed south, and that was the end of 2016. Sorry, going into the start of 2016, end of 2015, when we made those lows, and that corresponded to that $35 a barrel mark on crude oil. And that's pretty much going lockstep as we would expect with crude oil. And it's just bounced in most of 2016, pretty much pushed its way higher, back up. But the key level really on that weekly is up around that 12,000. You can see it's had that savage move down, did a bit of consolidation. We made some minor higher lows and correcting them. We just held these, if you can see that just in here, some lower highs, and it's just sold its way off end of 2015, start of 2016. So we'll go back down to the daily now, just remembering, taking into account we've got probably see more of just this latest price action, and the market has just been steaming its way, well, not steaming its way, just grinding its way higher actually. We're looking at the daily now. We can see that key level at 12,000 we just mentioned from the weekly. Now that's the key level really holding this latest trend down. One thing we're taking note of, or just firstly, we are getting this move up has been grinding its way higher, and we are getting to that overbought zone. It's getting a bit stretched up here. Obviously, no reason why it just can't keep going, because there will be quite a few shorts built in up there, but may start to come under a bit of pressure. So this thing could start to accelerate higher. But what we're looking at is really that 12,000 on the XEJ, on the sector at least, is the key level, which is holding down this trend. Let's just break down this chart a bit. What we can see from the move of around 15,000, that move down was quite strong and quite sharp. All right, so the steepness of that move down was quite sharp compared to what we just saw from probably middle of 2015 till the end or the start of end of 2015 to the start of 2016. So that's just an indication that it was pretty much sellers were well and truly in control there, and we had a few buyers stepped in, which got washed out. So maybe some early buying in that into oil stocks, and this is well and truly before OPEC talk of a production cuts. maybe preempting that, maybe a bit of bargain hunting through there, but that didn't last too long, which you can see that period through there, which is about 6 months, which is about half the length of what we spent just recently moving through, this sort of zone through here. So it wasn't as sharp, that move down. So it's just an idea to see that as the idea of buyers starting to step in, longer term buyers. We don't know what their outlook is, but they're definitely starting to step in and start to soak up some of that selling. Maybe there's a bit of selling running out of the market, and we do remember where the market's actually come from. So it's come from some lofty highs, not just 15,000, but higher than that. Remember the crude chart. Third leg down was quite. It's been bought up and it's spent a lot of time just soaking up. So it went from 125 a barrel down to about 35, which coincides the start of 2016 as well, about this time, just in here. So the time of all that, you can see that we are getting buyers step into the market. We've got a little double bottom, so there's a key level down here at 77.50 in the sector anyway, and it's just popped out those highs around 9,000. So like I said, we are getting a bit overbought, and the key level is up to 12,000, but realistically, there's still a fair way to move before we ever get anywhere near that 12,000. And there's probably a bit of work to do in crude oil itself, and obviously with regards to the production cuts, them to prove themselves and to no Swifties to be pulled, and them actually to adhere to what they said, what they agreed, OPEC members and non-OPEC members as well, adhere to those cuts. And once that starts filtering through, obviously, if it does, I think there's some really good potential to the upside. The risk to the downside, just remembering what's happened, if they don't cut as much, on the flip side of the coin, if they don't cut as much, and there is a few Swifties pulled, obviously Saudi have kicked off and they've cut more than what they actually agreed to. I expect Russia to do the same type of thing. If there's a few others that don't, or that they're a bit slow to implement those production cuts, then I think the risk to the downside is quite limited, and you still probably will get some buys if crude does break back below 50. I think that will be bought up quite hard and sharp. And like we said before, Saudi Arabia is going to do all they can to push OPEC in the right direction and to buoy those oil prices. So let's just take a look at a couple of stocks now. Okay, just quickly looking at this is Woodside. This is the monthly chart, so you can see that big run up in 2008. 2008, yeah, hard sell off. That was around the GFC times, and pretty much mirroring what oil prices are doing, crude oil prices. So you can see if that's the case with crude oil, it's starting to buy. We're starting to get a lift off that $25 mark. If we just go down a few charts, the weekly, probably look at the daily, you can see that market's starting to lift off, and we're holding higher lows at the moment, but it is starting to get a bit extended. Not so much now. The weekly is getting a bit extended, overbought, but and looking at the daily too is getting up there as well. So this market can easily just grind its way higher, pick its way higher. The key level on this one, probably going back to the weekly, is more up at this $44, if I can spit that out. And there's another little level down at 37. So it's got a bit of room to move on the upside. You probably would expect a decent little correction, pull back, and then buyers starting to jump in again. One I do like to look off is Oil Search. You can see the chart here. This is the monthly chart again, and that's going right back to 1999, say 2000. I see that big push down, and then we've just been grinding our way higher since then. Looking at on the weekly is a much better view. You can see this sort of move down. It's been some quite sharp, sudden moves down, which have been bought up, and it's found quite a good little base at $6 a share. And that's been lifting off $6, holding some higher lows around 625, but still I think the potential on that one too. If the monthly is, stochastic's looking really good, look in a good spot, good spot to hold, and that's starting to curve. You get that curving base there, it's starting to lift. If we can get through that 775, start taking out that level and even attacking up to 825 to 850 zone, then what I'll be looking for there is just that higher low to build, that bit of a pullback, higher low, and then on its way higher. If you just look on the daily, got a bit extended there and may just look to have a bit of a pullback. But still, what we're looking for now is just higher lows to hold, which it has been since way back in beginning of 2016. So that's showing some good signs. Just going to a few others. What have we got on Origin? ORG. It's starting to lift. That's actually looking quite nice on a daily anyway. Again, a bit extended there, but what we'd be looking for there is those high lows to hold, bit of a pullback, high lows to hold, and then looking for the entry setup on that one there. But still, it is holding higher lows over the longer term. We've looked at OSH, Caltex, CTX. That's if you just look at the weekly, you can see that crunching through there through 2015. Towards the end of 2015, did perk up to retest that high at 39 and sell off. And we just took out those lows recently, end of last year, around $30 to $29 a share. On the daily, the price action, look, it's got to get up through 31, you'd expect. Doesn't look as promising as the last one we just looked at, as oil search, but it's starting to hold some high lows over the last few months. But that one there, we just have to keep an eye on, I'd say. What else we got here? Just quickly, WOR, that has held higher lows since most of 2016, so that's shown some good signs. It's coming from a really, had those highs way back, if we go to the monthly, back in 2008, way up around 52.50 to $55 a share, and now we're showing it's right down about $10 a share. So it did come off some really well oversold lows there around 3, and it's just worked its way up off there, holding higher lows. So what you'd ideally want to be looking for on this one, again, it's the same type of scenario, a bit of a pullback, looked for signs of it holding a higher low, and then looking to buy into that one there. So there's just a few stocks. There's quite a few to go through if you want to. Actually, if you just go through to here, this is the just the stock codes I've been looking at here. Go to asx.com, documents/products/ASX energy sector profile PDF. So you can just go into the ASX, you'll be able to find that, or just Google it, and you'll come up with that list to have a look at. Anyway, that's it, guys. Any questions? Start shooting them along. Okay, guys, we're back. Let's just minimize that, close it down actually. Hope any questions on that? Or is anyone else looking at oil with the belief that it's actually going to pop higher? Now, I think it was back in 2009 was the last time. Around 2009, I think was the last time OPEC actually come to some sort of agreement on production cuts and non-OPEC members. And I think at that stage it put in about $40, $30. So really just looking for history to repeat itself there. And if that's the case, then I think a lot of these stocks that we just looked at, oil search was a nice one. I actually didn't mind that. That just mainly on the weekly. Just go to the month. You can see that monthly trend is starting to get rejection off $6 thereabouts, and you're just popping it down. It's starting to hold some higher lows, so that looks quite nice. Don't mind that. I think it might have a bit of work to do still before we get that entry signal, but if all plays out on oil, then we'll start to see some of these lift. All right. Is anyone looking at oil stocks by any chance as well? I'm just going through a few prices while we're looking at it. Don't know why that. Just go through a few of these stocks. If not, if there's any questions just on what we saw there, it's a bit rough. I did it a bit late last night, that video, so I apologize for anything that didn't make sense. All right, let's just have a look about where the market is still up 28. It's sort of holding those highs. I wouldn't expect too much more to happen, to be honest, only because we're probably quiet down towards the end of the session. We've got US going quiet. Already have ORG recently been moving stops higher. Good work. Did we discuss this previously, Sharon? Can't go wrong there. That's fantastic. That you can see that price action there. Let's actually just draw that up. That price action. That's what I'm hoping for a bit of this type of price action on crude itself. Just draw that up. I really like that. Yeah, I like Origin there. The one thing I'll be looking at just at this time, is it coming out all right? Get in there, come on. No, it doesn't want to be nice to me. We've got a slightly extended market by the looks of it. It's just up here. Like I said, that doesn't mean too much. You can easily just have these minor pullbacks be extended, pull back, and then just go again. The thing is, it's popped straight through, and it's found some really good level at 6. It pushed up, rolled over a bit, and got down to these lows around, was it 475 thereabouts. And the beauty was we held that high low, and that would have been a really nice type of breakout in there. Even this entry straight through here, if I was actually watching that, that would have been nice. But it is looking good. It's starting to work its way. It's held another high low. So if we got this as the current leg up, if we can draw a similar type of leg up, we could be taking us up towards 8 before we have that corrective action. Any levels on the left-hand side, I don't see too much, to be honest. There's a key level right up here, well above, just above 10. But either way, it's still looking good. That's where that 675 did a bit of work there, built that high low to push up through 675. But other levels around 775 thereabouts. So it could pull short of 8. It could spike through 775. But there's another minor. It's only a minor level on the way up anyway. So IFN. No worries, Clement. I'm actually just looking at that as alert, to be honest. Wally. So Origin, yeah, definitely looking good. Let's just take a look at Wally. Yeah, that's just having to go back to the way they start. It may or may not find a bit of resistance around that 12 mark, which is just that anchor for that most recent leg lower. But all in all, it's got, if you go back to the monthly to get any sort of perspective on that. On the monthly, it's had that big sell-off, push back up, pretty much exactly like crude, above 30 bucks a barrel. Oh, sorry, a barrel, 30 bucks a share to 32 a share, and then roll over from there. So that's the key level on the monthly. So just breaking it down for different key levels, you got a weekly key level, which we just saw at around $12. It's just been grinding higher into that $12 level. So for me, and it's done a lot of work up here, a lot of the times when there's a fundamental shift in the market, say with crude oil, it could just grind higher like that, but you'd think you'd get a decent enough correction to build that major higher low, maybe around 7 or so, which would suggest that it's got a bit of room to move on the downside before building that move and have another strong leg higher. But we'll have to see how it goes up towards 12. 11, $12, which is right up here, really. But yeah, either way, right through 2016, it's just held high lows all the way up, so looking good. I think it did. Let's look at IFN. We've actually got this one down, and we have alerted to it. Now we'll just go through. Just quickly on the monthly, you can see it's made a new low here. It's pushed out, made a lower high around 150, pushed right down, but it spent a lot of time around the 20 to 30 cent mark. A lot of time, well, 1, 2, 3, nearly about 4 years, where it's pushed up out of that zone. Okay, just above 20 to 25, 30 cents. We pushed all the way up from there up to $1.20. And what we're seeing now, if you just take it in context on the weekly, if you had that strong push up, it looks to be contracting in on itself, but it potentially is holding a higher low. So we go down to the daily just to break it down. Just draw that up. What I do like, okay, that's coming up there. The fact that it's moved up here, that's the leg, and then we've got a key level double top. It's brought some weakness into the market. You've taken out that and then retested. That's a dollar even. So we've made that double top. We should expect to take out the support level once you do the double top, which we did. Bounced back, retested it, and made some new lows. Hold some lower highs. You got another little minor double top in there, which pushed the market down, but it's pretty much just broken straight through. So that was for this leg down. The anchor, once that got through that 87.5 zone, this little spot here, if you can see, we pushed down really. Once it bounced back up through that anchor to this leg down, you say that's broken. So from there, we'd expect sellers, you either get contraction back up and then the market start to roll over again. But what we're seeing is really high lows holding. Okay, we had a high low here, comparatively to 70 cents. High low about 80 cents. We've built another high low around 82.5. And you can see that top of price section. If I can draw that in with a different pen. This top of price section is what we like to see, that curving price section. So it goes from a sharp move higher, curves, and I think some people call it a cup and handle. I don't know. I just like that type of price action where you see the lower highs and higher lows are starting to build. Okay, so that's why I'm starting to we're just keeping an eye on this one because I think that we're starting to get that point where it's building the higher lows, and we've just taken out this little level at 92.5. So I would expect a bit of acceleration higher. Okay, so if it can get through 95, I think your exit level is going to be below that 87.5. If this low holds, this high low holds, and that gives you a bit of room to move. If it does push up to 105, you probably find a bit of resistance, build a more major higher low. So if we get this type of price action is what we're seeing at the moment. What I wouldn't mind seeing is a bit more contraction and then that pop higher. And if that's into 105, which breaks that 95 cents just through here, wouldn't mind seeing that. Then I expect maybe a bit of major contraction and then that accelerator move higher through 105. That'll take us up and probably through 122. That's the way I'm viewing that at the moment. Only because I really do like this price action, just holding the higher lows. Where a week, really, if 105 could hold, we could just contract higher and then roll over, contract higher, sorry, and then roll over from here. But I'm starting to see that type of price action in conjunction with what's happening in energy and stuff as well. What else did you want to look at there, Clement? I've said ASL. That's nice as well. Just go back on looking. So on a more major note, so it's pushed all the way down to some major levels right back from 2002. After that big push up in 2012 to hit 420, sold off all the way down to 20 cents a share, really unabated. And that took out that, you can see we pushed down into around 80 cents, contracted around, tried to bounce off there, but made a major lower high and just really took out 80 cents all the way down to 20. But the difference is now, you can see these lower highs. You've got the high up here, made a shoulder around that, I think it was 350, thereabouts 360, pushed down through those lows. So that uptrend has just been broken at that stage once we got through these 270 zone. Popped back up, made another major shoulder there around that 330, and then started accelerating to the downside. We started to push up. That was off that 80 cent mark. Pushed up. We can spend a fair bit of time just there, retesting, testing, and price. The key level at that stage was $1.90, this high here. We popped up, made a lower high, and that's really just to bring in buyers. And a market can do that quite often when it tries to go through a support level. It hasn't broken anchor because the anchor to that downtrend is way up at $1.90. It pops back up. That can draw in a few buys, and then it turns around and just sells back down. It's the same in the buy side as well. It can do the same type of thing, push back up. The anchor doesn't break. It has a decent pullback. The anchor won't break to the uptrend. It can suck in a few sellers and then wash them back out of the market. Okay, and that's what it's done. It looks like to the buy side there. So you get some buyers jumping in. That was a good part of 6 months through 2014. Popped back up to $1.40, say $1.40, yeah, $1.35, and then sold off. And that's where it hit down to 20 cents. But what we did in this most recent move up through 2016 was take out that anchor. So that was the anchor at that stage when through 2014. Once it broke through this support zone, this became the anchor to this overall trend down from way back in 2012, and we broke through that anchor. So going down to the daily, just taking into account, so that trend up, broken that weekly anchor to the downtrend. If we see some more contraction here and we're building some higher lows, then definitely I'm seeing a bit of upside to that ASL anyway. And that's the beauty of it on that one. If we just draw it up. Oh, yep, that'll do. So we can see markets pushed up. We broke through the anchor. I can't remember, it was around $1.40, so that was the anchor. And then we just sort of contracting lower, pushing lower, new lows. And then we even just broke through that. It's a minor anchor for this contraction lower. And that would potentially mean that that's a higher low built. Once you get through this anchor, it's washed out $1.35, pull back, made that high low just below $1.20, say $1.15, and we're in the stages of really getting back up to $1.35. So what we like, the market's contracted lower. We've just washed out that anchor with this move up. Wouldn't mind seeing from here a bit more contraction, and just to bring in a bit more buying, as you can really start to see buyers take control of the market, and then that accelerated move up, taking out 140, maybe that pullback, but even a shallow pullback's a good sign of strength too, and that would lead me to believe that that market's going to really pop high and take out $1.70 on its way back up and continue that weekly move higher. Was that on ASL here, Clement? On BAR. Sorry, now I get it. Oh, beautiful. To be honest, that looks really nice. That's that curving price action. You can see when you see that type of price action, you get a good strong move down, pops back up, make a lower high, a good strong down, move down, but it can only wash out. You can see here, it's just this move down here from 7.50 down to 4 cents. Just washed out the previous low, but that's only minor, and then it popped back up, and then you start to see that level holding at 4, and you can see the high lows building, and then that acceleration to the upside, just taking out this little anchor at 5.50, and then that pullback below 5, held that level just between 4.50 and 5 cents, and then it's starting to work its way back out again. So that's looking really nice, actually. Where'd you get that at 5.3? Let's get that here. That's a nice little. Did you get it in this bar, or did you get that prior to this move out? Because if you got it just around here, just as it started picking up, it held that high low. Even just as a little heads up, a good, nice technical way to what we can look at, just as an entry style. I don't know how people enter, from a technical perspective anyway. Fundamentals different, but looking for entries from a technical basis, what I do like to see, generally, what I like to see is that pop out. That was your key level. At this stage, you got the high low. It's led to this move up. What I like to see is I generally go for an entry once it's broken out through the highs. Putting your risk at 4.5. Say it's popped through 6, but in this case, you've got this little level just through here. I do like to sort of front running in essence, front running that 6 breakout, because once it's got through 6, that's confirmed that higher low, and that's suggesting the market's going to move up to the next resistance level, which could be 7.5, even potentially higher through 8 and so on. And that could potentially be that. If we just change that color there, we might not be able to draw it up. So that's the leg higher, your contraction off that leg. And if that's the beginning of a new leg higher, if you can understand that, new leg higher, then you're in nice and early, and then you're sort of front running all that price action by getting in nice and early when you're getting a breakout of that move out of contraction. High lows are holding. That break up there was the key, and just getting in nice and early where you're front running this level in essence, and then you're front running 7, a break of 7.5. You may get a bit of reaction off that level, build another high low, and then pop through 7.5 and through 8 and so on. Okay, just bear with me 1 second, guys. I got any questions? Just whack it in there. You there? Yeah. So any questions just on that? Does that make sense? So traditionally, my style of entry, if I just draw it up, might be a bit clearer. So you got the move down. Okay, so you got your anchor level here. I like to see that, some lower highs. Once I break through the anchor level, then ideally, if it's had a good correction, I'm looking for a bit of a pullback and I want to see some higher lows, and then I'm in. So I know once it's broken there, that downtrend is starting to either break, and then I'm just looking for that higher low to build, which is in here, and a nice little entry, even off a minor higher low just in here, or if you don't get, you can see that here, if you don't get that, a break through the high, which is this level just in here, consolidate in here and push back up. So that's a higher low just here. You've got your risk just below that with a break up and through. If you get this style of entry where it just tries and it makes a minor higher low, then you're really just front running a break of that level. So you're just trying to beat everyone else to the punch. When, like we said before, when the market, it's more of the unknown than the known. Okay, so but that's the style. The anchor's broken here, which is at this spot just in here, just below 5 or around 5. It's popped up quite strong actually, and then had that little move down. To preempt that, you can see this style is a bit different. If we just go back, we've had that move up, broke the anchor at 5, it pushed up to about 6. We had this little move down. All right, so it's slightly different. So that way you can actually preempt a break of this level up here, and then which is what's happened. So you've pushed up through here, you can easily buy on entry, and that was about, it's probably where you got in there, Clement. And that's a nice, that's just a tighter stop of entry. You still got your stops around the same spot. You exit around 4.5. Your risk just below that low, and you're just preempting everything. But what we're in essence looking for is that next major leg high. You're getting in nice and early, and once we start getting up through 8 cents, that's a major higher low at 4. Okay, and then you've got in nice and early. You've tightened your stops, and you can really let it run. And that's ideally what you want in trading. You've got that leg up. You've got contraction of this leg. Okay, and you're looking for the next potential strong leg higher, and then you're looking for all this type of price action, entry setups, all your entry criteria met with higher lows, and then you're getting in nice and early when the outcome is unknown for a strong move higher. And once you start, if it fails up at 7.5, in essence, you've got a break-even trade to at least you're making some money anyway. So it looks quite nice. That's fantastic there, Clement, that one there. All right, any more questions, guys? Anything else you want to quickly look at just before we call it quits there? Just going through a few of what we've got. A2M, we've got that one there. That's kicked on. That's in the positive. Looking for that to kick on a bit more. ABC, we just alerted. Looking for that to push up through 540. And that's actually, if we just draw that up quickly as an example of what we just discussed, that's looking good. So similar type of price action to BAR. And this is the setup we're looking for. So you go, just draw that there. Nice strong leg up. And that's contracting because we can see the market push down, make that lower high here, push down here. The anchor was right down here at 510. And what we saw is it popped up off the anchor, built a major lower high, and it's pushed down, started washing out, tried to go up again, and really struggled at this stage. If that was going to hold, you would have expected another stronger move higher, but we didn't. We've gone and flushed out that level quite convincingly at 510. But then we just popped straight back up, and this was the clear anchor at that stage, around 530 to 35, that high just through here. So we pushed up through the anchor. So in essence, what we're seeing, early stages of that coming out of contraction, washing out the anchor. So we've got a lot of criteria which is met so far, and we're really just looking for a break back up again. And if we're looking for a break back up, we could potentially be looking for this next leg, because that's major contraction of that leg up. It's started to wash out a few of these long positions, but we're getting buyers stepping in at this level, 5 to 510, even at 530, early buyers stepping into the market to push it up to 550, contraction lower where it might be a bit more selling, and then what we're looking for is evidence of further buying. If we get that evidence of further buying, we get a push up through 540 to 45. That's preempting a break of 550. So it's very much the same type of setup as BAR. All right, and then we're looking for that leg to start building and pushing up through 6 and beyond. Let's just see where the weekly can take us. But yeah, and that's very much a similar type of setup as what we saw way back here. And December was that 2016? Yeah, last year. All right. What we'll do, guys, we'll call it a day there. There's not much else. We've got BRN's kicking along nicely. That's up around, still hanging around that 30 mark. I expect at some stage what we might be seeing here is a bit of a washout of those highs at 32. Don't know. Expecting that to kick on and really keep going. We may need a bit of contraction if we don't get some more buying stepping in soon. Prices may contract, build a major high later. We'll probably eventually be out of that trade, but we've done well on that. And CIM is the other one that's is starting to show a bit of weakness there. You can see that's coming off overbought, a bit stretched that market at the moment and falling short of this 39 mark. We may see a bit of correction, build a higher low, or we can just keep on going. If it keeps going, so be it. We just keep raising our exits. Yeah, so that's about it. Any questions? Whack them in the chat. We'll just wait to see if anyone's got any questions. Otherwise, we'll call it a day there, and we'll get back on again at the same time around 12:30 tomorrow. Just clicking over some stocks. All right, nothing pop up. Thanks very much for joining us, guys, and look forward to speaking to you again tomorrow. Cheers, guys. Bye.